Hello and welcome everyone. Here's a quick introductory explanation of what's coming out on Thinkorswim. It's very exciting and it's an awesome indicator which is free for customers of Thinkorswim. We are going to have released the Person Market Catcher Relative Strength Indicator, finally out and available. It's called the PMC. What does this tool do exactly? Well, briefly, it gives us the relative strength or weakness comparing a specific market to the overall benchmark S&P 500. It gives this to us in 4 stages. One would be bright blue, improving against the overall market to help us identify buying opportunities in the market. As well, it's indicating that as the market rises, you start to see the dark blue showing that the market is starting to, relative to the overall market, weaken. Then, so that would be 1, strengthening, 2, weakening, 3 would be when it crosses the 0 line histogram and starts turning dark red. It means the market is going negative relative to the overall market. So when you start to see the market maybe improving and basing out, you could say, well, now perhaps the market is starting to get a little better relative to the overall market. And then when you start to see it trend higher with these bright blues, then you see the markets improving. So fuchsia, the fuchsia colors, is the 4th stage. It starts to show that the market is improving, or that perhaps we've hit an impasse or the market's starting to see a bottom. So those are 4 phases that this helps us to identify, which is really an awesome tool because right before earnings, many of you are quite familiar with the person indicator, the PPS. Those are the arrows that you will see on your charts that give us buy or bullish and bearish momentum, otherwise known as maybe some sell signals and buy signals. But when you use this tool and the relative strength, in addition to the PPS, you could say, what is the quality of that sell signal? Is the market in a weakening condition? Or another thing that we use this for is for divergence patterns. Are we seeing, relative to the market, the last known high of a price? How does it relate to the indicator itself? When you have a newer high in price and a lower level in a corresponding indicator, it may show bearish divergence and give you a better, more powerful indication that the market is vulnerable for a major decline. So the same kind of situation happened with just the recent earnings report. Right before earnings, we were generating a sell signal. And if you look at this number 2 point compared to the number 1 point in price, we did make a new higher high in price. Look at the corresponding relative strength. It made a weakening condition against its prior high. So we did have a little divergence, very similar pattern that we had way over here. So what happened? The corresponding market, of course, we had a poor earnings report and it opened lower. So just one example of how we can utilize this tool. Now what's really neat is that we are going to host on our interactive trading community a free webinar called Seasonal Sector Trades Using TOS. Now, again, what do you think we're going to introduce? How to utilize this tool on that webinar. Of course, it's free, and all you have to do is sign up. And if you go to our website here at personsplanet.com, just fill in your name and your email, first name, last name, your email, and of course you will have access to both a free report on the doji triggers, but we'll also have you on our list to send an invitation for our webinar. So again, very nice way of learning more about this tool through Thinkorswim. And if you just sign up, you'll be on our list. We'll have room for you. We look forward to having you come in. In addition, next week, wow, it's earnings galore, especially as we call it Super Thursday, with all kinds of earnings from Apple. And again, Apple's been really an interesting setup here because now, and I'll just share this with you because we're going to discuss this a little bit. Since the end of November, if you take a look at Apple, its performance relative to the overall market has actually been negative. It's gone flat, the market. So at this point in time, it doesn't give me a warm and fuzzy that Apple's earnings are going to be lighting the board anytime soon. So according to both our sell signal and the relative strength, and unless things change going forward, Apple's not really a more dynamic outperformance of the market. Now, how does that compare to something like the hottest stock sector of this market, which would be the semiconductors? Let's take a look at how Intel looked before earnings. So Intel has kind of a very similar situation except for one thing. You will notice that Intel, as it's sitting here against this little trading band, right, it had a kind of a bullish convergence going ahead of earnings. Funny thing is, you'll notice that it would already been in a buy signal. And again, it gapped higher, sharply higher on its earnings reaction. So there are certain things that I think we can learn from this tool, and as we move forward, you're going to really be benefiting from the free webinar that we're conducting on February 6th. So sign up for that. Again, go to the website. It's personsplanet.com. If you're not on our mailing list or email list, just fill in your name and your email and look for your invitation for this educational event. It's free, and we're going to share with you how to utilize Thinkorswim's platform using my indicators. And one that we're going to be specifically focusing on, besides using scans on the PPS indicator for buy and sell signals, but how to filter those out using the PPS against the person's market catcher relative strength indicator. So way back in the fall, many people heard about what was going on with Kohls. Remember that Amazon, was thought that they may be bought out. But what was interesting is that as it started to see a decline in price, you'll notice this little arrow right there. The corresponding arrow had a very neat situation developing. The person's market catcher, and this is what we'll talk about, these specific patterns, started to share as we made a lower low in price than preceding levels. The corresponding indicator was making a higher low, and the fuchsia color was starting to show that it was improving, that this stock, even though it was down, was improving its relative strength versus the major market. Now, what's really neat is that it had already been in a PPS buy mode, and it started to develop a stronger trend, and the relative strength just exploded and fired off. So Kohls has been a very dynamic, outperforming market versus the S&P 500 and against some of its counterparts in that space. So again, I think if you're a stock trader, you're going to see significant benefit out of this indicator if you learn how to use it correctly. We look forward to sharing this with you. It's an exciting tool, and again, it will be available once Thinkorswim launches their releases in February, but you're going to want to learn how to use it, how to get a hold of it, and why is it important to you for helping you select stocks and scans. All right? Now that we shared with you about that, I've also got to answer a couple questions that were presented to me about why I've been so hot and heavy about the algo optimizer using the mini Dow contract. Well, I'm going to share with you a comparison of using the Dow versus the S&P in the last month, and how we've been focused and targeted using and putting our resources more towards the use of the mini Dow. So let's take a look at that right now. All right, so that we're all on the same page, let's just, this is the S&Ps up here, and as you can see, it says 5-minute. Format strategies, you can see it's the Person Algo Optimizer. It is not the latest version, it's the older version. And you can see that we're trading from 3:40 to 2:30 in the afternoon and only taking 2 lots. Now there's a lot more behind the scenes, but just wanted to make sure we're all on the same wavelength. The P&L so far is up 11,650 on this model versus the mini Dow at 15,325. Are they pretty much the same thing comparing an apple to an apple? Let's take a look. When we go to look at the same system, person algo, so we didn't use a different model, 340 to 230 in the afternoon, and it only trades 2 lots. All right, so we got the same system, same time frames, comparing an apple to an apple. Supposedly the Dow and the S&Ps are closely correlated, extremely correlated. But as you can see, this particular month, we noticed that there was some better trade moves and the dynamics of the mini Dow versus the S&Ps. And one of the reasons it might be very simply explained is that there's maybe slightly more noise, more competition amongst other algo and institutional traders, causing maybe false moves that could occur in the marketplace. And not to say that we don't get bad signals or bad trades, as you can see, if we would eliminate some of these shorts. Like if it's you can see the red line means it's a loser, and the blue line means it's a winner. But so we don't want to exclude every single short because we never know when this thing's going to roll over. The key is that, for example, this thing being long, maxed out, and of course it's just an insane dynamic market. Just when you think you know it all and it can't go any higher, it continues to go higher. So an algo optimized system takes over and just eliminates that emotional detriment that a lot of us may have in the market, especially trading something like this. And not many people have traded in this environment before, where it makes new record highs every single day. I mean, this is a pretty outstanding, insane move in the marketplace. But needless to say, when we take a look at the performance of the market in the S&Ps, we're up near a pretty strong and as you can see, this is the same model that I've been sharing with you day after, intra-week. And as you can see, we're right up against the new equity high in this market for this month alone. I mean, so on trading 2 lots on the mini Dow contract on an auto trade system has been doing pretty dynamically. So that's the difference. This is not a mechanical system. It's not like you can, kind of guess which sell signal and buy signal to take. There's certain parameters, and it, again, only trades through certain time periods, so it's not a buy and hold. The difference between the performance, real simple. I think that the noise, and the fact is that we do have a lot of different criterias, and the way the S&Ps have traded, generating, here's a trade that didn't do too well. It was long and it held the position and it finally got out, and nothing happened. And then it went long again and it got out at max bar. So we still have a very similar situation. Nice performance. Again, this is 2 lots too. I mean, I think we would all like to take, and again, full margin requirement on the mini Dow and on the E-mini S&P. You need full initial margin because this is holding positions overnight. But I mean, this is almost more than 100% return on your margin capital in less than a month. I mean, so this is an extraordinary month. I don't think that this is the kind of volatility in the trading ranges that we can expect every single month. But boy, I'll tell you what, it's been firing off on all signals, and one of these days it'll change where we'll see the S&P maybe outperform the Dow, or perhaps, as I may share with you real quick, maybe we'll get into looking at the Russell, which this year has underperformed the market tremendously. And in fact, it used to be something that would outperform the overall market. And I think the reason why we are more not excited, but been focused in on trading the Dow was mainly because, as I just pointed out, if you look at the average volume here, in the ES, 963,000 versus 132. Most people, professional hedge funds, won't mess around with this. Therefore, maybe that's why the mini Dow right now is getting better signals, because there's less competition for our bids and our asks in the marketplace. Funny thing is, I was one of the few market experts and traders that was promoted and used by the Chicago Board of Trade before the Chicago Mercantile Exchange to help launch the mini Dow contracts. A little bit of history here. Some of you guys, and ladies and gentlemen, may remember that. We used to go out and help to teach people how to trade the mini Dow for the Chicago Board of Trade using our methodology. So it's been around for a long time. Don't discard it because you think that it doesn't have enough volume. I mean, 132,000 contracts in a given day is still adequate for anyone to trade a few contracts off. Anyway, thank you for watching. And again, we'll update you on further developments as the system progresses, A. And B, don't forget to sign up at personsplanet.com, #1, for the webinar that we're conducting regarding the Thinkorswim Person Market Catcher release. We're really excited about it, and I think you're going to love it. Thanks again.